Welcome to RANsquawk's morning briefing for Tuesday the 12th of January in 2010. Taking a look first in terms of the Asian markets, we saw Japanese market participants returning to the market after a national holiday yesterday, so very much in catch-up with the stellar Chinese trade data that we saw, in particular exports, in yesterday's session. Nikkei then finishing up, again 15-month closing high there, a gain of 0.75% for the session, so JGBs were trading lower. Over in China, some continued commentary in terms of some tightening in short-term liquidity measures. We've seen the PBOC raise the yield on 20 billion yuan in one-year bills by around 8 basis points, where most traders were expecting only an increase of around 4. We've also seen them drain a record 200 billion yuan via 28-day bond repurchase agreements. Nevertheless, though, the Shanghai Composite did finish in positive territory. We've seen car makers leading the gains there overnight in China, having now superseded Germany as the biggest sales amount in cars last year. In terms of Fed speakers, worth noting Fed Bullard has said that there will take time for inflation to move up, and there are no worries over the course of the 18 months though. That was on CNBC late overnight. And the US government is considering a levy fee on banks to cover losses involved in the TARP program as part of the budget to be presented in February, according to the latest sources on both the front page of the FT and the Wall Street Journal today. Elsewhere, in terms of foreign exchange, the dollar index has fluctuated. It's pretty much unchanged at the moment, heading towards 11 o'clock now in London. However, overnight in Asia, the dollar did receive some support after comments out of China Investment Corp, who said that the dollar has hit a bottom, while the yuan will continue to decline, according to an official there. In terms of UK economic news, cable is trading up over 50 pips at around 161.40 currently. The December retail sales rose their full-year annual high, according to the BRC, which was much stronger than they had been looking for. The year-over-year in December was at plus 4.2% over the Christmas period. However, they did say that may not be sustainable going forwards, but net a positive there on the high street for the Christmas period in the UK. That allied as well to a reduction in the fears of potential hung parliament, as the front page of the Times in their latest poll suggests that the Tories have again increased their lead, given the latest developments over the cabinet trying to oust Gordon Brown for the third time last week. Also, in terms of economic data from the UK, another pound positive was the latest trade balance numbers, which did come in slightly smaller deficit than was anticipated. In terms of equities, though, we are trading negative. We're down around 0.5% across the FTSE CAC and DAX, pretty much stemming from the first of the major US companies to report for this Q4 earnings season was Alcoa, who did come out a little bit disappointing. EPS ex items came in at 1 cent. Analysts were expecting 6 cents, although revenues were slightly stronger. In Frankfurt trade, though, Alcoa shares have traded negative, and indeed basic materials are underperforming in Europe, allied to generally weaker commodities, with spot gold pretty much flat and WTI crude futures down around 50 cents at the moment. Looking ahead then to what we have to come from the US, we'll have the NFIB Small Business Optimism Index. That'll be at 12:30 to 6:30 in Chicago. US trade balance, that's the main figure for today. And then we'll also have Redbook IBD tips later in the session. And for energy traders, the API crude oil inventory numbers that we due after NYMEX pick close. And in terms of US fixed income, we'll have a $40 billion 3-year note auction allied to the Bank of England. Today they're conducting a reverse auction, looking to buy back maturities of 2036 to 2060.